Welcome to Fact Not Forecast, your daily edge in the stock market, facts, insights, and opportunities you won't hear anywhere else. Today we're embarking on a deep dive into Nvidia's Q2 fiscal 2026 earnings report, which just landed on August 27, 2025. You know Nvidia, they're undeniably at the forefront of the AI revolution, truly, the architects of next-gen computing infrastructure. We're going to unpack their latest financial performance, really examine their aggressive AI growth outlook, scrutinize their current valuation, and consider some of the long-term risks they're expertly navigating. Think of this as your essential shortcut to truly understanding one of the market's most influential and transformative players.
Absolutely. And what's particularly striking, I think, even amidst what NVIDIA's CFO called a dynamic external environment, is their consistent ability to not just meet, but exceed expectations and set new benchmarks. It really speaks volumes about the underlying demand for their technology.
It really does. So let's kick things off with those headline numbers that paint the picture of what was, for Nvidia, another truly remarkable quarter.
Indeed, the numbers are compelling. Total revenue soared to an impressive $46.7 billion.
$46.7 billion. Wow.
Yeah, that's a healthy 6% sequential increase from Q1 and a substantial 56% jump year over year. What's crucial, I think, for our listeners to note here is that this wasn't growth in just one isolated area.
Right.
It was seen across all their market platforms. This signals a broad fundamental strength across the company's entire ecosystem, not just, say, a single product cycle hitting its stride.
That's a key point, the breadth.
Definitely. And net income also surged, up 59% year over year, hitting $26.4 billion, and diluted earnings per share landed at $1.08. Their non-GAAP gross margin remained robust at 72.7%, illustrating excellent profitability even at this scale.
Those are staggering figures, especially that broad growth you mentioned. But if there's one segment that consistently captures the market's imagination, it's the data center. This continues to be the absolute powerhouse driving NVIDIA's incredible trajectory. What were the standout figures there, and what exactly is fueling this, relentless momentum?
Yeah, the data center segment truly stole the show again. Revenue there reached $41.1 billion alone.
Just the data center.
Just the data center. That's a 5% sequential increase and an astonishing 56% year-over-year surge. Now, this incredible growth was propelled significantly by their Blackwell platform. That saw a 17% sequential revenue growth and hit record levels. Nvidia began production shipments of its GB200 in Q2, and what's fascinating is that the new Blackwell Ultra platform, it's already generated tens of billions in revenue.
Already. Tens of billions.
Yes, it's not just a product launch, it's a really rapid deployment and revenue generation event that's happening right now.
I've heard a lot of buzz around the GB300 ramp up. For our listeners who might be tracking this closely, what are the latest developments on its production speed? How fast are they really moving?
The ramp-up for the GB300 is indeed moving at an aggressive pace. Production is now at approximately 1,000 racks per week.
1,000 racks a week.
And it's slated to accelerate even further in Q3. To put that in perspective, major players like CoreWeave are already reporting a 10x improvement in inference performance on reasoning models compared to the previous H100 generation.
A 10x jump, that's significant.
It's huge. Now, if we connect this to the bigger picture, NVIDIA isn't just selling chips. They're actively shaping what they see as a monumental $3 to $4 trillion opportunity in AI infrastructure spending by the end of the decade.
3 to 4 trillion, that number is just... it's hard to wrap your head around.
It really is. And this isn't just a growth trend. It profoundly signifies an ongoing industrial revolution, fundamentally altering how compute infrastructure is built and consumed globally.
So if we zoom out a bit, what does this aggressive push, especially with new platforms like GB300, really mean for the future of AI computing?
Yeah.
How are they pushing the boundaries?
Well, it highlights a crucial and strategic shift in how AI infrastructure is being built. Take the GB300 and NVL72 AI factories. Think of these as super efficient, ready-to-deploy modular AI supercomputers. They promise a 10x improvement in token per watt energy efficiency over the previous Hopper generation.
Token per watt. So more AI work for less power.
Exactly. For our listeners, that's a game changer. Token per watt basically measures how much AI processing you get for every unit of electricity. In a world where data centers are becoming increasingly power-constrained and energy costs are a critical concern.
Right. Power is a huge limitation.
Absolutely. So this isn't merely an efficiency gain. It's a direct competitive advantage and a vital factor for widespread adoption. They're also maintaining an incredibly rapid annual product cadence. The Rubin platform, for instance, featuring 6 new chips, including the Vera CPU and Rubin GPU, is on schedule for volume production next year.
Next year already.
This ensures a continuous flow of innovation across their entire full-stack offering, from compute and networking to systems and software. And interestingly, even the Hopper generation, including the H200, saw increased demand.
Oh, really? So older tech is still selling well, too.
Yeah, it demonstrates the incredible breadth of workloads that are still running efficiently on their accelerated computing platform. It's not just about the absolute cutting edge for every single task.
Got it. So we've firmly established the data center as NVIDIA's formidable engine, driving truly staggering growth. But what's genuinely fascinating, and maybe sometimes overlooked, is how NVIDIA's core AI innovation is now creating this ripple effect across all their other business segments. It's not just about the big iron, is it? Tell us about these expanding horizons.
You're absolutely right. NVIDIA's strategy is about leveraging its foundational AI technology across diverse markets. Let's look at a few key areas that really demonstrate this expansion. First, gaming. It also delivered record revenue of $4.3 billion.
Record for gaming, too.
Record for gaming, up 14% sequentially and a strong 49% year over year. The new Blackwell GeForce GPUs are a significant driver here, with the RTX 5060 desktop GPU already shipping.
Okay.
And Blackwell is also coming to GeForce NW in September, offering RTX 5080 class performance and doubling the game library to over 4,500 titles.
Impressive.
What's also compelling is their partnership with OpenAI to optimize GPT models for local inference on RTX-enabled Windows devices. This significantly broadens the AI PC market.
Ah, the AI PC concept.
Exactly, allowing users to run powerful AI applications directly on their personal computers. That's a massive new frontier for the consumer market, right?
Definitely.
Okay, next. Automotive and robotics. Revenue there grew significantly by 69% year over year to $586 million.
69% year over year. That's a big jump.
It is, primarily driven by their advanced self-driving solutions. Initial shipments of the Thor system on chip, or SoC, essentially, a complete computer packed onto a single chip.
Right, the successor to Orin.
Correct, which is the powerful successor to their Orin platform, have begun. Their full-stack Drive AV software platform is now in production, opening up billions in new potential revenue. And on the robotics front, the Jetson AGX Thor developer kit is now available, with leading companies like Amazon Robotics and Boston Dynamics already adopting it for their next-generation intelligent machines.
So automotive and robotics really starting to contribute meaningfully.
They are. And finally, professional visualization. This segment saw $601 million in revenue. That's a 32% year-over-year increase. This was fueled by the adoption of high-end RTX workstation GPUs and, crucially, AI-powered workloads for design and simulation. We're seeing companies like Disney and Hyundai leveraging RTX Pro servers,
Okay.
a product line that NVIDIA expects to evolve into a multi-billion-dollar business itself, showcasing AI's impact on creative and industrial design.
That's a truly comprehensive picture of growth across the board. But, every company, especially one of NVIDIA's scale and influence, faces strategic dynamics and competitive pressures. Let's talk about the big picture, particularly with geopolitical factors like China and how they maintain their edge.
Yeah, the China market is a prime example of these complex dynamics. It presents both, immense opportunities and significant challenges. While China-based data center revenue declined sequentially in Q2, NVIDIA has seen some H20 licenses approved.
H20, that's the modified chip for China.
Right. That's the one. However, it's important to note, no H20 shipments to China customers were actually included in the Q2 result or the Q3 outlook.
Okay, so no revenue from that yet.
Not reflected yet.
No.
NVIDIA could potentially ship $2 billion to $5 billion in H20 revenue in Q3 if those geopolitical issues resolve. And they are actively advocating for Blackwell approval for China. It's a huge market, estimated at $50 billion this year, potential for 50% annual growth, and it houses about half the world's AI researchers and many leading open source models like DeepSeek.
Wow.
So for you, the listener, the insight here is that while geopolitical tensions create definite headwinds, the underlying demand and innovation in China remain incredibly strong. It's a market NVIDIA can't easily disregard in its long-term strategy.
It's clear China is a massive piece of the puzzle, but also, as you said, a geopolitical minefield. Beyond the immediate revenue numbers, how is NVIDIA's long-term strategy being shaped by these regulatory hurdles? Are they, diversifying supply chains or R&D, or still banking heavily on getting Blackwell approved there eventually?
That's a critical question. Jensen Huang, NVIDIA's CEO, often frames it as a global effort to build AI infrastructure, emphasizing that the underlying architecture should ideally be universal. While they are navigating this specific regulatory landscape, their core strategy for maintaining their edge against rivals like AMD and Intel, especially with all the talk of custom ASICs.
Right, the application-specific integrated circuits.
Exactly. Chips designed for just one purpose. Their strategy remains consistent. Huang has repeatedly emphasized that accelerated computing isn't about a single chip, it's a full-stack co-design problem.
Full-stack co-design,
Yeah,
meaning hardware, software, everything together.
precisely. Everything from the hardware and the chips themselves to the networking systems and crucial software layers must be designed to work in perfect concert, especially as AI models are evolving at an incredibly fast pace. NVIDIA's platform is ubiquitous. It's found in every major cloud provider, from every computer company, extending from the edge of the network to sophisticated robotics, all running on the same programming model. He highlighted that building a Blackwell or Rubin supercomputer actually requires 6 distinct types of chips working together, not just one single miracle chip.
So it's really about the entire integrated ecosystem they've built, not just the raw silicon power.
Exactly. And crucially, NVIDIA's perf per watt or performance per watt of energy consumed is, well, currently unmatched. For data centers, which are often power limited, this directly translates to higher revenues because they can simply do more work for the same energy cost. Similarly, their perf per dollar leads to excellent gross margins, providing a compelling competitive advantage that goes far beyond just raw chip power. It's an economic and efficiency moat that competitors find incredibly challenging to replicate.
That economic advantage sounds profound. I'm also curious about this push for what's called sovereign AI, where nations develop their own AI capabilities using domestic infrastructure. How big of a driver is that becoming for NVIDIA?
Sovereign AI is, without a doubt, a massive and accelerating growth driver. They expect over $20 billion in sovereign AI revenue this year.
$20 billion, just from sovereign AI.
Just from that, yeah. Which is more than double last year's figures. What this signifies is that AI is now viewed by nations as a critical component of national security, economic competitiveness, and technological independence, much like energy or defense used to be seen.
Okay, so it's becoming strategic infrastructure.
Absolutely. For instance, the European Union plans to invest $20 billion to establish 20 AI factories, including 5 gigafactories, specifically to increase its AI compute infrastructure tenfold. And NVIDIA is clearly at the forefront of these landmark national-level initiatives globally. For you, the listener, this means a significant government-backed long-term demand for NVIDIA's advanced computing infrastructure, diversifying their customer base beyond just the traditional tech giants.
The scale of that investment is truly remarkable. Okay, looking ahead then, what's the financial picture for the next quarter, Q3, and beyond? And how are analysts viewing NVIDIA's trajectory given all this?
Right. For Q3 fiscal 2026, NVIDIA projects revenue of $54.0 billion, plus or minus 2%.
$54 billion. That's another huge step up.
It represents over $7 billion in sequential growth, which is just astonishing for a company already at this scale. Gross margins are expected to remain very strong at 73.5% non-GAAP. And to support this rapid expansion, they are accelerating investments. Full-year operating expenses are expected to grow in the high 30s% range.
High 30s, okay. So they're spending to grow.
Exactly. It clearly reflects the sheer magnitude of these growth opportunities they are pursuing. The company also authorized an additional $60 billion for share repurchases.
Another $60 billion.
Yeah, signaling strong confidence in future cash flow and long-term value. That brings the total authorization to over $74 billion.
So after absorbing all these figures and strategic insights, what does this all mean for NVIDIA's valuation and long-term prospects, especially for those of us tracking the market?
Well, the stock closed at $181.60 on August 27, putting the market cap over $4.4 trillion. While there might be some natural after-hours fluctuations post-earnings.
Sure, always happened.
The consensus among analysts remains overwhelmingly a buy. The average target price hovers around $197, $198, with some high estimates stretching up to $270. Analysts forecast earnings and revenue to grow over 20% per annum for the next few years, significantly outperforming the broader U.S. market.
20% plus growth at that scale is impressive.
It is. And this robust outlook is fueled by several converging factors: the continuing evolution of reasoning agentic AI, These are the next-gen AI systems.
Right, the ones that can plan and decide.
Exactly. They don't just process data, but can also understand context, plan, make complex decisions autonomously, much like a human. These systems demand 100 to 1,000 times more compute power.
1,000 times.
Wow.
Yeah.
Add to that the global build-out of sovereign AI we just discussed, widespread enterprise AI adoption, and perhaps most excitingly, the arrival of physical AI and robotics, which Jensen Huang calls entirely new industries.
Mm.
So for our listeners, it's about understanding that these aren't just incremental improvements. They are fundamental shifts in computing that really solidify NVIDIA's position as a foundational technology provider for, well, decades to come, potentially.
Jensen Huang famously said, the AI race is on, and this idea he floated. If every industry and every industrial company will need to build two factories, one to build machines and another to build their robotic AI, just imagine the truly monumental scale of the computing infrastructure that will be required. It fundamentally redefines what a factory means in the 21st century, shifting from purely physical output to intelligent self-optimizing systems. This isn't just about efficiency, it's about the very blueprint of modern industry. It's a powerful thought. Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.